Hello and welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay, and it was a fourth day of near carnage on the bourses. Starting from last Tuesday, this is a 400-point fall on the Nifty and, of course, an over 1,000-point fall on the Sensex itself. Nothing is being spared, and at the moment, it looks like there's nowhere to hide. Hi, Shruti.
Hi, Lata. What a way to start the week. Levels just coming and going on the way down. Plenty to talk about, lots of opinion as well. Let's first start with the headlines. It's a manic Monday on Dalal Street with bulls bleeding. The Nifty cracks 2%, falling well below 8,500. Sensex tumbles 555 points. All sectoral indices end in the red, with realty and FMCG stocks leading the losses.
Heavy pressure on blue chip stocks. Reliance Industries cracks 4.5% as traders booked profits after the company reported in-line fourth quarter earnings. NMDC slumps 5% after the company cut iron ore prices by up to 20% for the remaining days of April.
Carnage in the mid-cap arena as well, with the mid-cap index falling 2.4%. Heavily traded stocks like Suzlon, Rolta and HDIL collapse anywhere between 4 to 9%. FMCG stocks like Britannia and Marico have tumbled 5% today on fears of subdued earnings. Glenmark, however, bucks the trend, gaining 4% after raising funds via an equity sale to Temasek.
A volatile day for the rupee as well. The Indian currency drops to a one-month low of 62.92 before pulling back just a wee bit. Higher than expected March trade deficit and the weak trend in equities weighs on sentiment. Well, those were some of the headlines from the markets. But before we move ahead, here are some of the big voices that we will get you through the course of this show. Ajay Srivastava of Dimensions Consulting will give us his take on why the markets seem to be under a bear siege, as it were, while Sanjay Dutt will talk about the key levels to watch out for. And on Corporate Radar, we will be joined by Rajiv Bajaj of Bajaj Auto with his outlook for the company and the auto industry.
All right, before we get you all that action and opinion, let's talk about what happened today. The bears are now all over the Dalal Street as markets saw some deep cuts in trade. Weak earnings coupled with a sell-off across most of the Asian markets proved to be a deadly cocktail of sorts as stocks got battered. Anuj is now here with the wrap of the day's trading action. Anuj, massive sell-off. Any indications of what really triggered this kind of a huge carnage?
Well, the simple answer is that the market is technically weak. Today, the market would have fallen in any case, even if you didn't have that kind of fall in Asia. Because, in the late trade, the European markets were quite okay, and still the market was falling. This market, the trend changed last week on Wednesday when the market was up and it lost way. After that, it's really been brutal. The sell-off today was brutal, especially in the mid-caps. A lot of stocks fell about 5 to 20%, and that really was telling you the kind of sentiment that the market has right now. In fact, it was broad-based in nature. Reliance led the sell-off, but IT, banks, capital goods, almost everything joined in late trade. And as I said, it was really a terrible day for the mid-caps. In fact, take a look at some of the stocks that led the market down. A set of three heavyweights which led the market down the most. Reliance, HDFC and ITC, all of them down quite a bit. Reliance, in fact, was down about 6% from the morning high. So clearly a bad day for that stock. Apart from that, some of the stocks that led the market down, L&T, ONGC, Hindustan Unilever. So as you can see, it's across various sectors that you saw losses in trade today. Not just that, the next bit would tell you even more. Infosys, Hero MotoCorp, Cipla, all these stocks falling between 2 to 4%. So across various sectors, leadership stocks were falling in today's trade. Banks, now that was quite a bit of interesting picture. In the first half, the bank Nifty was outperforming, but in second half, even that stock or that sector was falling quite a bit. So IndusInd, Axis, Yes Bank, they were all lower by about 3% by the end of trade. And finally, in the mid-cap space, first take a look at the high beta space. You had stocks like HDIL, Rolta, Reliance Communication, all losing between 5 to 10%. But the pocket that's most disconcerting to the bulls is the non-index large-cap stocks, high-pedigree stocks which are falling. Mindtree, PTC, CESC. In fact, there were so many stocks like this which were falling between 5 to 10% F&O stocks. So that would tell you the real level of sentiment or the damage that's been done to the sentiment. Now, Will it continue? That's an interesting one, because a lot of people believe that 8200 is the level at which the Nifty could bottom out, but consensus hardly gets it right. So it will be interesting to see if the market either bounces back even before that, or actually goes on and completes a correction which is even bigger than 8200. So that's something that we'll be watching out for over the next few days.
Yes, Anuj, take your point on the things that we have to watch out for, but actually a sign of the weakness is that both centers of weakness and centers of strength were giving way. Centers of weakness, NMDC, it cut iron ore prices out of turn, and one could see the sharp fall in the NMDC stock. Likewise, Hero Motor and the other two-wheelers, Bajaj, have been having a torrid time throughout the year, throughout 2015 that is, and now with renewed sense of rural weakness, those stocks took a further beating. M&M would be in the same category, with both its four-wheelers and its tractors not doing well. So the rural weakness story was playing out over there. Elsewhere, the pockets of strength, as Anush pointed out, the erstwhile FMCG majors, or for that matter, stocks like a Bharat Forge, stocks like United Phosphorus, stocks which had made so much money for investors, also saw selling for exactly the opposite reason. There is money, let us preserve the profit and take some home before everything is wiped out. So both pockets of strength and pockets of weakness were seeing profit taking, or rather outright selling today.
Right, Lata. So completely savage cuts coming in out there. Let's get some market perspective going as well. Ajay Srivastava, CEO of Dimensions Consulting, says skepticism in the market provides pockets of opportunity and advises traders to buy into the market if the Nifty slips to levels of 8,200.
I think 8200 kind of is an emotional kind of support. So there'll be a lot of people who come in to buy at this level. So purely on that, I would believe that that's kind of an interim level. If the results continue to be as bad as they're looking, as what we can see coming from the this thing, and depending on the parliament session, if the international markets kind of go under a little bit more, 8200 is there for the taking. It's not that far for us, and I think there is. If I were to bet on the whether it will go towards 1800, I don't know it's reached 8200 or not, but if it goes towards 8200 versus 9000, I would bet on the lower side, not on the upper side today. Recovery is seemingly now getting delayed and delayed and delayed. That's one. And number two, a big important event is taking place. The social backlash coming out of the economic policies is gathering momentum. And I think government is running out of time to deliver on the ground to prevent this social backlash which is coming up. We may say it's politically driven, we may say economically driven, we may say it's farmers, is whatever we want to say it. But at the end of the day, when you cut so severely in the budget for all the social sectors, this is the backlash you expect. It's come sooner than the government thought, and government is running out of time. So little skepticism in the market, but also gives you pockets of investment at this point of time. So there's opportunities and there is skepticism.
Right, we'll take the opportunity perhaps. Well, now first, for all the action from the futures and options space, let's cut across to Varinder Bansal. Varinder.
Well, certainly it was a bad day for the markets. Nifty unable to hold that 8500 mark. We have been mentioning about that point, that watch out for that 8600 put, which was having the highest open interest outstanding, and today huge unwinding happening over that, clearly suggesting more downside for the market. Now that 8600 put, the highest open interest has now shifted to 8500. Clearly, the wall for the market is now downwards from 8700 to 8600, and more downside room is now open for markets to fall down. So as I said, there was massive unwinding happening in 8600, 8700 put. Highest open interest now stands at the 8500 mark. On the call side, you are seeing huge call rating happening at 8600 call, which added nearly 21.9 lakh shares in open interest. Even 8500 call added nearly 16 lakh shares in open interest. Such is the power of all these call rating at 8500, 8600 level, which is suggesting that market doesn't have more upside on the higher level. Well, back Nifty was down only 1.5%. We saw open interest up by nearly 16%. All those stocks which were weak last week due to results will continue to fall today. Reliance was down 4.5%. Results came post-market on Friday. We saw huge open interest position on the short side happening on the stock. IndusInd Bank, was very weak today. Axis Bank, most of them. Yes Bank was also among the private sector banks which was weak. IndusInd Bank was down only 4%. Open interest up by nearly 9%. Mindtree fell nearly 5 or 6% on Friday, but the stock was down still 6.5% again. today, and open interest was up by nearly 2.5%. Hero Moto, that stock has been on a losing streak, down nearly 3.5% today. Open interest up by nearly 7%. And something was happening in FMCG pack, ITC, HUL, Britannia. Britannia of course not an FNO, but these were the stocks. ITC, HUL, they were falling today. ITC was down nearly 3%. Open interest up by nearly 4%. Real estate stocks were weak today. SDF was down nearly 9%. Fresh short build over there. And some of these, high quality mid-cap stocks like UB, CESC, UPL, they were also falling. Keep an eye on HCL Technologies. That stock was down nearly 2.5%. Results are tomorrow. That stock was seeing some, shorts getting built up ahead of the results. So it'll be interesting to see how the stock makes when the results come pre-market, tomorrow morning.
All right, Varinder, thanks so much for that. Let's move on to some more news. Daiichi Sankyo has announced that it will sell its entire stake in Sun Pharmaceuticals. The Japanese major holds nearly 9% in the company after the merger between Ranbaxy and Sun Pharma. Nimesh Shah is now here with all the exclusive details on this one. Nimesh, how big is this stake sale and is there any discount?
Well, it's a huge deal. It's not a big deal. It's a huge deal. 3 to 3.5 billion is what Daiichi Sankyo will raise by selling its entire 8.9% stake in Sun Pharma tomorrow. And yes, there is a discount as well. The indicative price, what we understand, is between 932 and 1048, which is a 0 to close to 11% discount to today's closing price in Sun Pharma. Now, the book size of 21.5 crore shares, that's the entire what Daiichi Sankyo holds currently in Sun Pharma, and that is what they're looking to sell in the block deal tomorrow. The book is launched officially for global investors and local investors today. Goldman Sachs is the sole book runner who's running the book on behalf of Daiichi Sankyo. Now, the one speculation which has been doing the round since the morning was whether the Sun Pharma promoters will tender or buy in this block deal and increase the stake in Sun Pharma. That is something which is still a speculation. We don't know whether they will subscribe or they will buy some shares in this block deal. But we do know that Daiichi Sankyo is looking to sell its entire 8.9% stake in the block deal tomorrow. The deal will get executed tomorrow. We understand that there will be a combination of global and local investors will participate. But in terms of size, yes, it's a very large deal. $3.5 billion is what Daiichi Sankyo will raise by selling its entire 8.9% stake in in Sun Pharma tomorrow via block deal.
Thanks a lot for that, Nimesh. That's 20,000 crore nearly of shares that will hit the market. And what you say is right. The speculation about the Singhvi family itself lending support must be very much there. Otherwise, you won't have the stock ending 0.6% higher at a time when so many shares are looking to hit the market. Well, now let's talk about the big earnings that the markets will watch out for tomorrow. Tech majors Wipro and HCL Technologies will be releasing their third quarter numbers. And Rima Tendulkar, our expert on IT, is joining us to tell us what the street is expecting. Tell us, Rima.
Thanks so much for that. It's going to be a busy day of earnings with both Wipro as well as HCL Technologies slated to declare their earnings. For Wipro, we're expecting a dollar revenue growth of 0.7%, a constant currency growth of 6%. Remember, HCL Technology had positively surprised the street with its growth numbers last quarter, which is why it's the best performing large cap IT name. So this quarter too is expected to declare earnings which are better than what the peers had reported. Margins are seen under pressure, down more than 100 basis points QOQ because of currency as well as wage hike. Key to watch for will be the performance of the engineering services, which had seen a growth of 12.5% in the previous quarter. For Wipro, we're working with a dollar revenue growth which is muted to just up close to about 0.2%. In constant currency terms, it will be a growth of 2%. So this will be in the middle of the company's guided band of 1 to 3%. Margins too will be lower for Wipro, again impacted because of cross currency. The key in Wipro will be the Q1 guidance, which is seen at 1 to 3%. Remember, Q1 is a seasonally weak quarter for Wipro, so don't expect any fireworks in the guidance. And plus, Wipro for Wipro, energy is an important vertical, and energy sector is under pressure because of the weakness in crude oil prices. So Q1 guidance will be the key to watch out for in Wipro, as well as comments on the organizational restructuring. Back to you.
Now let's turn our attention to Motown. Though rural demand may be weak at the moment, Bajaj Auto still expects volumes to grow 20% this year, and therefore the company is expanding capacity at Chakan. Listen in.
So for a number of reasons, the existing plant at Chakan may fall short, say 12 months or 18 months from now. So we thought it's time to expand, and we had acquired a piece of land some years ago over there. So we are starting our activity, I think sometime next year, I can't say exactly when. the plant will be up and running. We are looking at an initial capacity of 50,000 a month, if I'm right. I don't have the exact investment figures because we bought the land some years back, and in terms of the actual plant, etc., it is just being crystallized.
All right, on that note, time for a quick break, but coming up, Sudarshan Sukhani will be joining in for a technical chat, and we'll also get you some trading ideas.